Now, you probably think this video is clickbait because you don't see many 94% win rate strategies. And today I'm here to show you complete proof of exactly how I managed to achieve that. In this video, I'm not only going to show you the backlogs of all of the trades on the Alpha Futures website to show exactly what my wins and losses were, but I also have full live examples of me taking the trades and winning the trades. And I also have a full breakdown of the entire strategy that I used step by step so that you guys can follow this exact strategy yourself to achieve the same results as me in the market. Now, a quick disclaimer that I do want to address is that yes, I have had a 94% win rate with this strategy in the evaluation stage. However, I do take evaluations different to a funded stage, so this isn't a consistent 94% win rate. However, you can achieve this if you follow the same things that I did in this step, and on average throughout all of my accounts and all of my fundeds, this achieves around a 75% win rate at worst case. Now, the first thing I want to do is show you guys the actual backlog of the trades, so let's get into this on the Alpha Futures website. So like I mentioned, the first thing I'm going to go over is the actual account on Alpha Traders to show you guys the proof. As you can see here, we have $53,000 in balance, and this was the profit target that has been achieved and we have passed. We've also passed every other statement here. So as you can see, we have the qualified account here right now. What I'm going to do is head over to trade history and break down every single trade for you so you guys can see exactly how I managed to do it. So if we move over to here, you can see we had a break even, another break even, we then made 1.5%. Then over these two trades, we made another 1%. We then had a loss of $91, which is about 0.2% of the account. And then we had a few more break evens or small trades here where I managed my risk well. And then again, and as we came into these end bits here, we made another 1%. We made some small profits that equivalated to 1%, made another 1%, and then our 0.5%, and we passed the account with all of these. As you can see here, I've taken a total of 1, 2, 3, 4, 5, 6, 7, and then 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 trades. We've had 17 trades in total, and I've had one loss that was only 0.2%. Now, as you can tell by these statistics, it is a 94% win rate strategy. However, these wins are break evens because the most important part about all of this is being able to manage your risk accordingly and know when to correctly go break even to help avoid any losses. And I'm going to show you guys exactly how to do that later in the video, so don't worry at all. But that is the key factor and the key metric towards getting this high win rate strategy is having good points to go break even so that we're always safe. And although you might take a few more trades, you're going to have a better win rate, which psychologically can help a lot of people and make you feel like you're doing a lot better. Some people take higher risk to rewards with lower win rates, which can also work with no problem at all. But for some individuals like yourself that might be struggling with psychology, being able to have a higher win rate will definitely help you to feel better while you're taking these trades to help you avoid things like FOMO and revenge trading and things along them lines. So the first thing I'm going to do now is I'm going to break down exactly what the strategy is, how it works, and how I mark this on the charts every single day. And then after that, I'm going to show you guys some live examples of me actually taking these trades on the charts so you can see the days where I made some good profits and exactly how I manage my risk during these trades to show you guys a complete breakdown of everything. Let's get into how the strategy works. Okay, so now on the chart, I'm going to show you guys a perfect example of what this strategy looks like and exactly how to take it on the charts. So the first thing I've done here is I came onto the 4 hour and we're looking for our general bias. And at this point, this is where the trade is taken down here. So we want to look at the most recent data on the 4 hour. And as you can see, we've had a huge push downwards. So we're expecting some form of correction and then continue downwards. And our bias will be bearish because of that. So we look on this leg for any 4 hour fair value gaps. Now, as you can see, there is one up here. And there's also one that I've already marked out for you here. So because of that, we know that we want price to either come up and tap this one before we move or come up and tap this one before we move. Now, as you can see, I've also marked out something on the 1 hour for you guys as well. This fair value gap was actually hit, which looked like a good place for price to turn around. Even though it's from quite a while ago, we had a 1 hour fair value gap right here. And then if I drag that along after this huge push downwards, this was a good reason for price to start to move in the opposite direction. And then we want to get that correction because like I say, after any move like this is on the 1 hour and the 4 hour. We're going to continue in that direction because that's our bias now, but we want to try and find a sell to the downside after we've had a correction. So with that in mind, I've marked up our key levels on the 4-hour and the 1-hour. I've marked out these fair value gaps, and we know roughly where we want price to react out of each time. So now we drop down to lower time frames to start to look for better reasons for entry. So we have our bias in place, which is bearish. We also have our key levels in place, which are the 4-hour and 1-hour fair value gaps down here. So we want price to come into this 4-hour. Now, as you can see, the entries around here, we came and tapped into this 4-hour fair value gap before moving away. Now, a lot of people will consider that this is already a fair value gap that's been tapped now, so it doesn't really have any more strength. However, we deal with internal highs and lows within fair value gaps. All this means is when a price has already came in and tapped a fair value gap, we want price to not only stay in that fair value gap and respect it, but also sweep the liquidity inside that fair value gap. So it swept the high here, swept the internal high within the fair value gap, and then it's still respecting the fair value gap. Now, a quick point that I want to make. You might look here on this 15-minute time frame and say, well, it didn't respect the fair value gap, Jack. It actually went all the way through and closed through. But that's not the case. The fair value gap is on the 4-hour chart. So because of that, you can see here, we actually did respect it with a large wick. So this wick here only came and wicked above, and we didn't close up there, and it's on the 4-hour. So because we closed below, this is actually a perfect example of what sweeping an internal high inside a fair value gap would look like. So because of that, now we've got another strong confluence here within our key level that when we sweep this internal high, we need to start looking for sells, because now is a great opportunity to get into sells. So with that being said, my final execution point is to look for entries between the 5-minute and the 30-second. And the way that I do this is after we have a move to, in this case, the upside, I look for an inversion to the downside. So as you can see here, we've had a bullish candle upwards, and this has left a fair value gap. So this might be the perfect place to get into a trade. However, we've had our bearish candle, perfect, and then if we inverse this, this will be a perfect entry. But we didn't. We had another bullish candle, and this is on the 5-minute. So to get the best entry possible, we want to go to lower time frames where there potentially might have been a fair value gap on this specific 2:40 p.m. candle and see what we can find. So with that in mind, I'll drop down from the 5 to the 4 and then all the way down. As we can see here on the 4-minute, no fair value gap. So we drop down to the 3-minute. And on the 3-minute, there is also no fair value gap on this specific candle here. So we drop down to the 2-minute. And now that we come onto the 2-minute, you can see that there is a fair value gap here. Now, one thing I do want to mention is the highest time frame fair value gap is always the most important fair value gap to keep in mind. Now, as you remember before, we did have a fair value gap on the 5-minute that was around here, a little bit lower, and it wasn't up here. So if I drop down here to the 2-minute, the 1-minute, and the 30-second, and there still isn't a fair value gap up here, then I would look back at that 5-minute fair value gap, which is the highest time frame, and I would use that as my entry because it can be inversed. However, in this case, we had an even smaller leg that came up, so I wanted to look for fair value gaps here, and the highest time frame we have one on is the 2-minute. With that in mind, what we're going to do now is mark out that fair value gap and wait for this fair value gap to be inversed to the downside. And as you can see on this candle here, we inverse that. So as soon as this candle closes, you want to get in an entry here, and this is what your entry would look like. So now that we know the body close has been below this fair value gap, you get in an entry. I think because of the millisecond it took me, as soon as price opened this new candle, it moved up slightly. So I got in around about here, and then you're going to set your stops to the high and your take profits to this low here. And this is what the perfect trade will look like. However, we're not finished. I know you might think, oh, we've entered on here, the trader's hit TP, this is exactly how the trade should look and it's finished. It's not. This is the actual secret that separates this strategy from everything else, and it actually got me the 94% win rate, because anybody can find a strategy that prints like this, but to get such a high win rate on an evaluation stage, you need to do specific secret tips like this, and this is the one secret that did that for me. So now that I've got my stops at the high and my take profit where they want to be, obviously we wouldn't have these candles printed yet, but I'm risking about 300 on this trade. So because of that, I need to find my perfect break-even point. You saw how many break-evens there were in them trades before. This just protects your win rate and protects your capital so you don't go on crazy losing streaks and constantly need to blow your account. I want to ask you a quick analogy. Would you prefer to have 15 accounts where you've blown them so many times, but then you end up finally passing in 1 or 2 trades because you play a lot more risky? Or would you prefer to have one evaluation phase that might take a few more trades than your average, but you're not spending all of that money? And yes, you're hitting a few break evens, but you're not actually losing every single time. So it's better on your mental, better on your psychology, and you're not spending anywhere near as much money in these evaluation phases. Because of this, this is exactly why I use this strategy. So we want to find a good break even point that we can go to as early as possible. Now we know here there's a 2 minute fair value gap, and there's also a 5 and a 4 and a 3. Every fair value gap is stacked up here. So this is a very likely point for price to actually want to reverse. So because of this, we want to find a point to go break even before that. Now in this example here, we actually have a low here. That would be a perfect break even point. If we break this low, then that would be a perfect place for us to go break even and be happy with the trade. However, if you don't have these lows in place, that when you close below, you can go break even though this would be perfect, you can use the top of the fair value gap. So the biggest fair value gap you can find, obviously we have a 5 minute as well, but it's around about the same as this 2 minute. Well, exactly where the top of this fair value gap is, you draw a line, and the second that price closes into this, that's when you're going to go break even, because you know at that point there is a chance that we can come into this fair value gap, tap, and then completely flip. And yes, we're super close to our entry point, so you might think, oh, we can come down, tap, maybe breathe a bit and come back up and tap this new fair value gap and then fly down. Yeah, you're right, we can. That is entirely possible. But the point of this strategy is we only want to catch trades where they're like this. This is on the 2 minute chart, bear in mind. So we've had 1, 2, 3, 4 within the fifth candle. So within 10 minutes, I've had enough conviction and momentum to my side of the chart that I want price to move to. So I'm in and out of trade within 10 minutes because it's only moving in the direction I want. If price does come down, tap this fair value gap, and then come back up, it would stop me out of break even, and then hit this fair value gap and then move down. Brilliant. So be it. I'm break even, but I don't mind because I wasn't in a trade for now what would be about 30 minutes instead. I'm in and out within 10 minutes. Yes, I might make a few more break evens, but I'm playing it a lot safer and I'm passing accounts with it with no issue. So because of that, I'd go break even here. And then if you really want to play it safe, however, on the evaluation phase, I only do this on the odd few trades. It's mainly the funded stage where I do this. But once we inverse this fair value gap, as you can see, we inversed it when this candle closed here. You can actually bring your stops into a little bit of profit as well and just sort of trail behind. And then you will hit full TP, or you will always have some profits that you'll come out of the trade with. I'm now going to show you guys the exact live example of me taking this trade right here now. Now you've just seen a full breakdown of exactly how I made 1.5%, not only with me breaking down the step-by-step of how I managed to place that sell, but also showing a live example of me making that profit. Now, just in case that isn't enough, I'm going to show you guys like another example with some different confluences we also use. You'll notice now that the strategy does have a few different confluences and it can be quite discretional at times. So if you guys are struggling at any point in this, then make sure to click the link in the description where what I'll do is I'll give you access to our free community in Discord where you can ask any questions you might need to help you understand it better. But also I'm going to include a free PDF in there breaking down every step of the strategy and things you need to look for and exactly what that looks like with picture examples on the chart. If that's something you guys are interested in, click the link in the description to get free access to the Discord community and to the PDF. With that being said, let's jump back into the second example. Here, I'm going to show you another example where I took a buy position, but it had slightly different parameters, but I'm also going to show you exactly why I took this and then show you the live example again to understand why I took this trade. So we're on the 1 hour here, and this is what we can see on the charts right now, because imagine that this is where I'm at this current stage. As you can see, we're bullish moving upwards and then we're retracing, bullish moving upwards, and then at this point, you could potentially look at this retracing, or if we completely close below these lows, maybe even swap into bearish. But as you can notice here, if I draw my 1 hour fair value gap out, you can see here and drag this all the way along, you can see that we have actually tapped this fair value gap twice. So it looks to be a strong area where price might likely reject from, or maybe not even reject, but come down and have a retracement of some sort. So with that in mind, I marked the 1 hour fair value gap. So just to recap, we know we're bullish and we're looking for buys. We have our key level, which is a 1 hour fair value gap. And now we're also looking, and you can see we've already tapped this. So we're looking for the internal low sweep this time to get a buy. And as you can see here, we managed to get that internal low sweep. Let me drop down to a lower time frame to show you how we have our execution. The higher time frame is done with. So now I've dropped to the 30-second, and this line here is that internal low where we swept here. But as you can see, we have two lows within this. We have the first low, and then the second one actually came a little bit lower, and it swept that liquidity to this new low here. So what we can do sometimes is look for an SMT with ES. So what I'm going to do now is pull up ES to check if we had any SMTs. So we have NQ on the left where we want to be taking our trades, and we have ES on the right. We've had all our higher time frames, but just before we execute, we have these two lows. So we want to check if there's an SMT. As you can see, this first low here correlates to this low here. And then this second low here, which has swept the lows, correlates to this high, or this new low here. Because of this, we've swept the lows and moved downwards on NQ, but we've actually moved upwards on ES. So this isn't SMT because they aren't correlating, which means that we've taken the liquidity here, but we haven't taken it there, but we don't need to, and we can start to move upwards. So because of that, we're even more confident now that we're looking for buys. So now that I know we've had an SMT, we can drop that off, and then we can start to look for buys on this leg. Obviously, there is one on the 30-second right here, a bearish fair value gap that I can mark out. However, what I want to do is I want to check from the 5-minute first, because if there's a higher time frame fair value gap on this specific leg here, even though this is only 2 candles, then we can take it based off that fair value gap because the highest always wins. So this is on the 5-minute. As you can see, there's absolutely nothing here. Again, on the 4-minute, there's nothing here at all. It's a fair value gap. Now on the 3-minute, again, around this area, nothing that's a fair value gap. This is the 2-minute with all the wicks, no sign of a fair value gap. Now on the 1-minute, we do have these 2 legs down, but again, no sign of a fair value gap here. So we have nothing to reverse, so we drop to the 30-second. Okay, now we're back on the 30-second. As you can see here, we had our 30-second fair value gap right here. So we would wait for this to inverse until we enter. So as you can see on this second candle here, we actually inversed. So at the start of this third candle, somewhere around entry price, we would end up getting in with our stops at the body low, and then our TP at a 1-to-1, which is about here. Or we can also have our TP at a 2-to-1 if I bring my stops lower, because I'm so confident because of the things we've had. We've had a bullish bias, a 1 hour fair value gap. Price has tapped this 1 hour fair value gap already. So we've had the internal low sweep, and then we've had an SMT on these 2 lows and a 30-second inverse. So because of this, on this particular trade, I actually risked a little bit less and brought my stop loss quite tighter so that I could hit a 2-to-1. I risked 0.5% to gain that 1% of $500, as you saw in the trade before. Now I'm going to show you guys the trade live of me taking this. Now that was the full breakdown of how I achieved a 94% win rate strategy, along with live examples in there as well. If you guys do have any questions, or you're a bit curious about certain steps and you might need a bit of assistance, then don't forget there's a free Discord community you guys can join in the description, which is not only going to give you access to directly message me and ask questions about the strategy to make sure that you can copy this yourself, but it also gives you access to a completely free PDF breaking down every single step of the strategy so you guys can follow that while you trade. I'll catch you in the next video. Peace.